When we look at Latin America and the opportunities in the region, we first need to focus on the top three economies. Brazil, after a very significant recession in 2015 and 16, had very little growth in 2017 and 2018 because of the political uncertainty. With the election behind us and a bit more of a pro-market approach out of this government, we think Brazil could actually be poised for growth. And interestingly, we don't think we are dealing with a banking sector able to deal with an increase in credit demand if we start seeing genuine economic growth out of the country. We're expecting around a 2.5% growth for 2018. If that were to be the case, Bladex expects to do some very good business there. Mexico is going through a period of uncertainty because the new administration needs to prove that it's not going to deviate from what the world has believed to be established policy over the last 20 years. Two specific things we were going to be following: the project to build an airport outside of Mexico City and the continuation of the energy reforms. So far, the airport construction was essentially stopped, and the energy reforms, what we're hearing out of the country, has not been encouraging. For the time being, we're not curtailing our exposure, but we're going to be monitoring that very closely. Argentina has gone through a significant crisis of confidence in 2018 that the country is trying to deal with the establishment of an IMF program and a more austere policy with respect to expenditures and the curtailment of fiscal deficits on a go-forward basis. The problem with that is that a diminished expectation for economic growth in the country will result in some political uncertainty. That said, there are some good opportunities in the Argentine private sector because companies have been able to deal with macro uncertainties for quite a while, and they are prepared to endure such volatility. As such, we believe that there is some business to be done there as well. From a trade perspective, Latin America continues to be very much a commodity story. Under a more stable commodity price environment, trade in Latin America could grow about 6% per annum, which is below what it used to be during the commodity price bubble, but still very respectable to provide for a basis of overall solid economic growth. It's really up to the individual countries in the region to be able to take advantage of that and be able to do the type of long-term investments it needs in order to diversify its economies beyond commodities and have more of an industrial and knowledge base so it can provide value to the world economy.
Thanks for watching. Bladex is celebrating 40 years of supporting trade in Latin America. Tap now to watch the video about the work they do or learn more at bladex.com. And please subscribe for the latest international business insights from worldfinance.com.